What I'm starting to see right now and what a lot of people are talking about is kind of the end of the consolidation or pullback, where you start to get the next leg up.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today, a new guest, Kelvin Burton. He's the investor relations person for American Creek Resources. Kelvin, thank you so much for joining us today.
Hey, great to be with you, Elijah.
Definitely. Now, David Scheckman, the founder of Miles Franklin, actually suggested we have you on. So yeah, I'd just love to hear a bit about your story and how you got involved with American Creek.
Sure. Well, and David and I have known each other for a couple of years now, and he's been telling people who subscribe to his newsletter and so forth a little bit about us. And so I'll tell you a little bit about our background here. And so we are an exploration company in the precious metals sector. And we focus not only on precious metals, but in British Columbia on the west side of Canada there. And we have a number of projects, but there's one in particular that I'll talk to you about in just a few minutes here that's really caught the imagination of a lot of people because it has the potential to be a world-class deposit.
Definitely. Now, with respect to, I wanted to really first talk about the supply of gold. What is your perspective, just the overall, kind of the big picture of the mining industry right now?
Sure. Well, it's an interesting one. It often seems like a boom bust type of industry, but there's a number of interesting developments that's going on within the industry, and that is that. Overall, in the big picture, the supply of gold is gradually going down. Or maybe I'll put it this way: the deposits that are being discovered is no longer low-lying fruit, right? It's much further up the tree, and so a lot of deposits that are being discovered these days are generally more expensive to discover and to develop. They're usually more remote. A lot of them are in AK-47 jurisdictions or parts of the world where it's not particularly politically safe. Grades are often lower and this type of thing. So overall, it's becoming harder and harder to find great projects, and in particular, ones that have the potential to supply over an extended period of time. So there's a lot of gold projects that are kind of that 5 to 8 year range, but there's fewer and fewer of them that can be 20, 30, 50 year type of projects that can give a big supply for a lot of years. In fact, just recently, one of the presidents of a major gold mining company mentioned that all the reserves in the ground have been used up. Sorry, half of them have been used up in the last 7 years of all the reserves. And so these companies, they need to be able to go out and find projects to replace the ones that they have right now. And one of the issues with that, Elijah, is the fact that because of permitting and because of the fact that they're harder to find and further away and all these other things, is that it takes longer to be able to develop them. So a lot of projects that used to take 5 or 6 years are now taking double that to be able to go into production. And so this is the situation we find ourselves in within the production. On the one side, it's becoming harder to find great projects. On the other side, though, the stuff that is being produced is really highly profitable right now.
Now, with respect to the supply of gold, I know if we look back at March with respect to COVID, we saw some shutdowns of the mines. How did the whole coronavirus thing impact mining, and how may it still be impacting mining?
Sure. So that depends a little bit on what country you're in, and I'm from Canada, but it obviously had an impact right away. And affected the supply of gold because pretty much everything was shut down to begin with. And then slowly but surely, Canada is one of the countries that deemed it an essential service. And so slowly mines started to figure out ways to be able to comply with all the rules and be able to go in and start producing again. So there was an immediate drop, and then it's slowly coming back online now. I don't know that it's back up to full production yet, but it does affect the supply, which obviously affects the price. And even then, a lot of companies can't really run at full capacity compared to what they used to, and it actually affects the exploration industry as well. And so, having camps and everything else is just a lot more hoops to be able to jump through. And so, when your exploration gets bottlenecked, then that bottlenecks the supply, and that bottlenecks the production of gold. But Elijah, I'd like to just go back to this concept here of the gold that's being produced right now is very, very profitable. And so, our philosophy has always been you should own physical gold and silver first, because as you know, that's a preservation of wealth. And then when you go beyond that into the production or exploration for precious metals, that's where you can start to make money with it, right? The other is a preservation of wealth. This is growing wealth. And it all starts with the producers. And so what you have is a lot of producers, especially of lower grade deposits that are often large and lower grade, they might have had a cost of, let's just say, $1,000 an ounce to produce, and they were producing at $1,100 or $1,200 gold. Well, as soon as gold goes up to $1,400, they haven't just increased by 8% or 10%; they've actually doubled in their profits, right? And as we've followed gold lately, it's gone from that kind of 1,100-1,200 range and shot all the way up to 2,000 just in this last year here. And so the producers are actually making money hand over fist right now, and a lot of them are deciding to pay that out in dividends. And so I think that's a great spot to look as far as putting some money in. But the reality, as I already mentioned to you, is they have to replace the stuff that they're doing. They've already burned through half of it, in the last 7 years, and it takes a while. So there's this real crunch to be able to get great projects. And so they're taking part of the money and investing it into new projects and trying to find something, the next big thing, and then the rest they're paying out in dividends to shareholders. Now, where we fit into this whole picture is we're an exploration company, and so we have projects throughout British Columbia, and we have one in particular that's up in the Golden Triangle. So that is right where the Alaska Panhandle comes down the side of British Columbia. It's kind of this little skinny stretch, and right at the tip of that, where Alaska ends, is this area in British Columbia called the Golden Triangle. It's called that because it just has so much mineralization there. There's been past producing mines, and there's current producing mines, ones that are just going into production, ones working towards production. And that's where our flagship property is that's up there.
Now, if you'd like to share with our viewers kind of your perspective on the gold market itself, and then kind of how might the continuation of the gold market kind of impact mining stocks and possibly yours?
Sure. So I think everyone's noticed by now that the gold really took off here over the late spring into summer, and then had a pullback. A lot of people were calling for that correction to take place and for it to consolidate. And overall, it's actually a very healthy thing for the market in general. And what I'm starting to see right now, and what a lot of people are talking about, is kind of the end of the consolidation or pullback, where you start to get the next leg up. And so you have that taking place. And then seasonally, you have gold that tends to start to really grow legs into mid-November, and then into the New Year's, where a lot of stocks really start to take off because of that seasonality buying that takes place. It also takes place because that's when a lot of drill results start coming back in, right, from summer programs and fall programs. And so you have that as one factor to consider. So I think naturally it's going to be going up. Of course, the second factor, and probably the biggest thing in terms of gold, is the fact that my government and your government and pretty much everyone else in the world is just printing money into oblivion. And so as the dollar devalues, it strengthens gold. And of course, that brings us into, short term and even long term, the election, that's taking place in the United States. And I've seen so many experts talk about the fact that really whoever wins, it's going to be good for gold in the long run. Now, in the short run, I think there could be a possibility of a lot of uncertainty, right? If there's questions about who won and how soon that gets resolved and everything else, markets tend to be really jittery, and gold tends to strengthen when people have unsurety. And so it could go up on that short term, but I think long term it goes back to monetary policy. And, whether it's Trump or whether it's Biden that wins, with this COVID thing that we were talking about earlier, right? I think there's going to be more and more and more stimulation through direct cash to people, and that means more money printing. I'm not even sure they print it anymore. I think they just type it in. So it's looking very, very positive for gold. And then when you combine that with what I was talking about previously in terms of the shortages of gold and great projects and everything else, it really bodes well for people who, have physical stuff to be able to store under their pillow, as it were, but for the investing community to start to invest in both producing and really high quality junior exploration companies where they'll have the most leverage.
I wanted to touch on one aspect you just said. So how really it's important to have kind of a core position in physical precious metals,
yes.
But then
yes.
The mining stocks on top of that. And you mentioned how as the price goes up, often the profits, at least what we've seen recently, the profits go up. They're highly leveraged with respect to the price, right? So that's pretty normal with respect to mining stocks versus the physical metal, as the mining stocks are often more highly leveraged, correct?
They are. And in fact, I don't know if you want to consider it a whip or not, but physical gold is again a preservation of wealth. So it might look like you're making money when it goes up, but really it's just a devaluation of the currency, right? And whereas mining stocks, they have that leverage. When I say mining, I mean producing stocks. They have that leverage. Just we've seen such an incredible increase that this is many, many, many times over. And in fact, I've seen a lot of people say that actually production stocks the companies are making more money than they ever had. And so two things are going to happen there. One is you are going to get a good return. And like I said, like a whip, back where you have the handle of the whip, you don't have to move it much to crack the whip, right? And so these stocks can go up and down, and they will move up and down and give you some leverage. But the further down the whip you are, the higher and lower you can go with it. And so what we're seeing here is we're seeing producers start to rise in their market caps and their valuations. But what we're really seeing is the junior stocks really taking a strong move upwards. So as an example, American Creek Resources, and all my prices are in Canadian dollars. We, back at the beginning of the year, we were close to 10 cents. COVID hit, and we went down with everybody else. So we got all the way down to 3.5 cents. And since then, because of the development that we're doing on Treaty Creek, we are now at right around 30 cents, 33 cents, somewhere in there. And so there's been, close to a 10-fold return there so far this year. And we think that there's a long ways to go. So this is one of the key areas where people can really build a tremendous amount of wealth, because we're a little bit further down the whip, than the actual producers are. And so maybe I should tell you a little bit about Treaty Creek and the project that we have running there.
Yeah, definitely. So that's your main project is Treaty Creek, and then we can also get into your secondary project Dunwell Mine. But yeah, first, if you'd like to share with the viewers about Treaty Creek.
Sure, no problem. So I already mentioned this Golden Triangle area here. Within that Golden Triangle, there's a project that actually has the largest undeveloped gold reserves in the world. Reserves are what you can actually pull out of the ground profitably. And that company is Seabridge Gold. They're traded on the NSYE in the United States and on the TSX or the on the Toronto Stock Exchange in Canada. And they're in part of a large geological system. And there's a series of deposits that happen about every 2.5, 3 kilometers, or just a mile and a half, something like that. And within that series of deposits, they have 4 of them. We have the largest undeveloped gold deposit in the world by reserves, and we own the adjoining property to that. So the actual geological system or hydrothermal system carries on right through the whole thing. And we believe we have a few of those deposits on our side of the line as well. And we're developing the first one right now. It's called the Gold Storm, and it's found on Treaty Creek. And to give you a sense of where we are with that right now, one of the defining moments of discovery is when you actually come up with a resource calculation. That's where it goes from great holes in the ground to a definable thing or a bankable thing. We have X number of resources at this grade and that type of thing. And that's what we're working on right now. Now, when I say we, I should clarify, this is a joint venture project. The operator of the company is called Tudor Gold. The president of that is Walter Storm, and he was one of the founders and main funders of Osisko Gold, who had the Malartic mine in Canada, in Quebec. And a lot of people made a lot of money off of that. It was bought for less than $1 million and sold for about 4.5 billion Canadian, about 3.7 American. So it made tremendous success there. And this is his next project. And so they are the operators of it, and American Creek has a 20% fully carried interest in that. That means that we don't pay anything towards it. So normally, Elijah, we would pay 20% and they would pay their 60%. There's another company called Teuton that's in there, and they would pay 20% as well. But in this case, we're fully carried, which is great because these types of projects usually take hundreds of millions of dollars to be able to develop. And so where Treaty Creek is right now is it's in that stage where Tudor's going to come out with a resource calculation either at the last quarter of this year or first quarter of next year. And that's usually when stocks go up tremendously, is when you are proven that you have something very big. What we're looking at right now in terms of size, I'll just quote some other people. Eric Sprott is a Canadian billionaire precious metals investor, and he is the largest external investor in this project. And a few quotes from him just recently. One is that, hey, this could be one of the largest deposits in the Americas, both north and south. And then a few weeks before that, he'd said, I'm sure they have 20 million ounces. They could easily have 30, 40, 50 million ounces. And so this is absolutely world scale in size. The head geologist for it is Ken Conkin, who just won an award for Canadian mining and put a mine just a few kilometers south of this one into production. And so he knows what he's doing. He's the right guy to run it. And he's saying that this is very comparable to another deposit he worked on called Snowfield. And that one had about 25 million ounces of gold M&I. And if you include inferred, about 34 or 35 million. So we think there's a potential to be in that area. And that really fits that niche market I was talking to you about, where the majors need something big. And the problem with a lot of the big stuff is it's in that is either being produced or it's in AK-47 jurisdictions. And British Columbia is actually a really safe place to be. And then you have logistics. So there's actually some great projects up in Alaska, but they have huge logistical issues and environmental issues as well. This particular Treaty Creek project and the Gold Storm that's on it, it's just 20 kilometers from a highway. And along that highway is the cheapest power in the world. It's high transmission power lines, which the BC government put in just a couple of years ago. It's only an hour and a half from the shipping port, which is ice-free all year, and it already ships ore for other companies. And it happens to be on the right side of the mountain compared to Seabridge Gold on the other side there, where there's just this really easy access. It has potential to be open pit mined. It starts at surface, which is really critical with these big deposits. And so it's looking very, very promising right now. And that's why our stock's been moving up and up, is because of the main development of this Treaty Creek project. We think it's one of a couple that we might have on Treaty Creek. As I mentioned, there's a series of them, and this is the first one.
Definitely. And before we let you go, Kelvin, if we could just quick touch on the secondary project you guys have at American Creek, the Dunwall Mine.
Sure. Love to do that. So up where the shipping port is, an hour and a half south of the Treaty Creek, there's a little town called Stewart, and then there's a littler town called Hyder, and it's in Alaska. It's right on the border, and the Portland Canal that comes in from the ocean is the border is right halfway down the middle of it, and it goes all the way out to the ocean. And right outside of that town, like literally 8 kilometers, so maybe 5 miles or something like that, is our Dunwell Mine project. And it's a past producing mine. It shut down way back in World War II. It was a high grade mine in this case, so it's much different than Treaty Creek. Treaty Creek we're guessing at around a gram a ton, times millions and millions of ounces. Whereas this one here is much smaller, but it's very high grade. So its historical production was about just under 7 grams per ton gold. And then historically close to equivalent of that in silver, lots of silver, and lead and zinc. And so our object with that is to go back in there and see what's left over from before. And it looks like it's very controlled by a faulting system that goes through there. So we've done a lot of great exploration on it just recently in terms of different type of geophysics. And so we ran induced polarization on it. We just ran a magnetic study and a LIDAR, and that's giving us a lot of great information where to look for a continuation of the metals that were taken out previously. And so we're really excited about that one. We haven't started drilling that one yet, and that's because, we did a drill program last year. We haven't started our program this year, and that's because American Creek Resources just announced that it's going to split the company, and it's going to keep Treaty Creek and one other project in American Creek Resources. And then we have a lot of other great projects, the Dunwell being one of them, and it's going to move into a new company called Stinger Resources. And anyone who owns American Creek shares will own shares in both. Right up until the end of the year. And then Stinger becomes a new company at the end of the year. So right now, anyone investing in American Creek gets both. And at the beginning of next year, then we can look at starting up a drill program to follow up on these excellent geophysical anomalies that we've seen running in there and the history. And the beautiful part about it is that it's, like I say, it's about 16 minutes from the adit to the shipping ports. It's that close by and to the town. And the other really unique thing about it is there are other mines in the area that could actually take that material and mine it in their systems. And so it might not require us to go the whole distance on this one, which would make it far cheaper and quicker and that type of thing. So I would just recommend, looking up americancreek.com and look at the different projects, and you'll be able to get more information on all of them.
Awesome. Well, Kelvin, thank you so much for joining us today and really giving us an insider look into the mining industry. If you'd like to share with our viewers, any last thoughts you had before we let you go?
Sure. I really, well, you know what? I'm just going to back up a little bit. I'm going to go back to the earlier this year when COVID hit, and we like everything else, we dropped. And a lot of people panicked, and they ended up selling. And there's a great analyst who said, the reason why they call it a bull market is because people get bucked off. And the sad part is a lot of people, if they just hang on, they could really profit from them. But so many people end up, thrown on their heads. And so my recommendation is to, regardless of which part of the gold sector that you're in, that you hang on. And that you make sure that you have enough physical stuff for your needs. But beyond that, I think American Creek is an exceptional example of a company that's perfectly poised to take advantage of this shortage that's coming up and the price moving up. And it's really kind of a super cycle. And so I just invite everyone to look into it. And if you have any questions, just give me a call.
Well, Kelvin Burton, thank you so much for joining us today.
Great, Elijah. Really nice to meet you.